I got into a gold sell this morning. I sold around 6:30 when I woke up. I saw that it broke through support. And so I think the big move happened around 1 a.m. in the morning. Happened during Asia session. So the way I thought about it, well, typically with the ICC trade, you wait for, because this is the indication, you wait for the correction, then the continuation to the downside. Now, I typically follow that when I'm entering buys, but when I'm entering sells, it's just time to execute. I want to get in the market as soon as possible. Because the way I was thinking about it, well, at 6:30, I'm Central Standard Time. So Chicago is waking up, and New York, Washington, D.C., they're already up. The other side of the world is already up. And on the West Coast, like out in California, it's 4:30 over there. They're not up. They're not up at all. And so people will be waking up that their precious gold narrative is falling apart because institutions have been selling into retail for the past year. And the data clearly shows that now. And so you would think that during a time of geopolitical uncertainty, or, look, central banks accumulating physical gold, that gold would be increasing. But the dollar is strong because the Fed isn't going to cut rates. And gold has already had a historic run. And so these corrections are natural. And as was pointed out by a recent analyst, like there are two things happening with gold. Partly it is safe haven. Like in the long run, yes, gold is $6,000 an ounce, absolutely. But in the short term, it's not $6,000 an ounce because too many retail investors saw it as a momentum trade. And so they were in for the quick buck. They wanted to make money fast. And institutions just used retail as exit liquidity. So that's what's happening now. So I sold all my gold, like in my like I had a lot of gold in my retirement accounts and ETFs. I sold that like a week or two ago. I was DCAing out, but I sold the bulk of it about a week ago, and so I'm out of gold as far as like my even my like long-term holdings because I had a lot of it. And it's like, you know what? I'll short gold in the short term, and once it hits levels around 4,500 and even lower, under $4,000, I mean, yeah, I'll buy another $50,000 worth of gold in my retirement account, but I'm not going to be buying like right now. Like now's the time to sell. One quick point. It's not smart to trade your own emotions, but sometimes I like trading other people's emotions, particularly with sells, short sells. I like looking at the charts as well as taking into account fundamentals. But also, I like trading other people's psychology and emotions. So when people see that their precious asset is selling off aggressively, they're going to capitulate. They're going to get out. And it's going to just create a cascade. And so you notice like price moves a lot more aggressively to the downside than it does to the upside. Now, don't get me wrong, during a bull run, gold was acting the inverse of this in January. So you could certainly point to times where assets could appreciate very quickly. But typically when fear and panic set into people's minds and hearts, then that's it. That's it.